This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Dean Serroni, thanks very much for coming on Talk Your Book, making your debut. We'll get into your protocol pick soon, but I thought if you could start with Merkel Tree and tell us a little bit about your genesis story, your investment philosophy and how you guys look to invest.
Thanks, Chris. Great to be here. So a little bit about my background and how I entered cryptocurrency. My business partner, Ryan McMillan, and I got together last year and formed the fund. But prior to that, I ran a tech startup, which is a mobile phone application, and it was a consumer-based app, and we were looking for monetization pathways. While we were doing that, we explored in-app ads, subscription-based models, and then cryptocurrency is an interesting way to achieve monetization as well. And at the time we partnered, this is back in 2018, we partnered with a project called Kin, which ran on the Stellar blockchain back then. And as part of that experiment, it worked okay, but we were still very early. But we had the opportunity to run a Kin validator node on the Stellar blockchain. And we did that for a little while. And then in 2019, Kin migrated their infrastructure across to Solana, and Solana was a new emerging token, and we then stopped running the node, and that was the exposure that we had to Solana back then. So held a series of different cryptocurrencies from that previous startup, which sold in 2019. Come 2021, at the tail end of lockdowns and COVID, Ryan and I got together. Ryan comes from a very much a traditional finance background in product development, hedge funds, that kind of thing, and my background's more tech entrepreneurship and cryptocurrency. And we got together and set out to start up the fund, which is Merkel Tree Capital. We launched in August. We're a cryptocurrency diversified portfolio. We manage that in a long-only type investment thesis. We believe very much in the blockchain technology, and cryptocurrency is an asset class, and we believe that it's going to be everywhere in the 5 to 10 year time frame. And so what we're doing is we're investing predominantly in assets that sit in the top 100 by market cap. We focus very much on assets that have already proven themselves over a number of years, have growth and adoption metrics that we're comfortable with, and we have a diverse exposure to those assets, and that's all custodied, by institutional grade custody. So we're trying to offer investors a safe and smart way to get access to the asset class and blockchain technologies in a long type investment approach.
And there are different types of crypto investors. There are some that are almost religious in their enthusiasm for crypto and convinced it's going to transform every industry across the globe. And then there are other investors that have a portfolio across a number of assets and want this to be a small allocation of an overall portfolio strategy. What are the most types of investors that come to Merkel Tree? Where do they sit out of those two brackets?
Yeah, very much. We speak to a lot of planners. We take a modern money portfolio type approach to cryptocurrency investing. So we're looking to provide a small allocation to someone's broader portfolio. So a typical allocation to cryptocurrency for our normal investor would be, for example, a self-managed super fund, taking anywhere between a 1 to 5% allocation to cryptocurrency in a blended portfolio like ours as part of their broader portfolio. And that gives them exposure to the potential upside in 5 to 10 years down the track with that long-term view, and only minimising the downside volatility with a smaller allocation. I think the beauty of the product that we've built and provided to the marketplace to wholesale investors is that investors don't need to be thinking about which coin to be in all the time. Is Bitcoin going to be the leader in 10 years still? Is it going to be Ethereum or Solana or some other emerging layer 1 blockchain? Investors can just know that they've got exposure to the asset class and the ecosystem, and we'll manage that for them and make sure it's securely custodied. And
we'll get into your protocol pick in a minute and the one you want to dig deeper into, but we're sitting here today on, what is it, is it the 10th of May?
Yeah, I think it is.
Whatever it is. The crypto markets are puking, as are equity markets. Yeah. And I saw a tweet this morning that said the bottom will be when you decide that you can start going long and short. And I thought that was a good laugh. Yeah. But that's really ugly out there across all asset classes. But I think one thing that's relevant to crypto is Terra, the algorithmic stable coin. Well, there's a risk of losing its peg. I think last time I looked, it was trading at 88 cents per dollar, which is not how a stable coin is meant to react. Maybe talk people through, just in broad brushstrokes, what algorithmic stable coins are and the significance of Terra in the fact that they're holding a heap of Bitcoin, which they're now selling to try and defend that peg. Yeah,
it's been an interesting 24 hours for Terra and Luna. So the idea is it's an algorithmic-based stablecoin. It's meant to hold a peg to the US dollar. It's backed by another coin, which is Luna, and as demand comes in for the stablecoin, Luna gets bought and sold behind the scenes, and that's there to balance the allocations to derive a US $1 peg at all times. Now, what's happened is more recently, the Luna Foundation has started purchasing Bitcoin in large amounts to provide some safety rails around the market. And what's actually happened, I was chatting to a good friend recently and raising some concerns about this. It all works well when the market is stable and operating fairly normally. When the demand for the UST stablecoin diminishes and people start to sell it, in order to retain the peg, the Bitcoin that they're holding in their reserves needs to be sold as well. And unfortunately, when Bitcoin's going down as well, there's this potential to end up in as some people term it, a death spiral, where both assets are being sold in a market and the value of the underlying reserves is also diminishing. And I've actually seen, I think just before I came in, Chris, I think it was trading at around 65 cents.
No way. Yeah. Oh, wow. So it's almost done.
It's so I think once it gets below about 0.5, 50 cents, things can get really ugly.
Wow. So this is almost like George Soros in the early 90s attacked the US pound.
Right.
I mean, this is not as big as attacking a foreign government, but it's I mean, there'd be hedge funds all over this, I assume, shorting the crap out of it, because they can see those points where there's strong support at zero, I guess.
Yeah, look, we're very grateful we didn't take a position in Luna or Terra. There were some pretty attractive yields, I think around 20% per annum on that. And those yields are typically offered to sort of catalyse the ecosystem and promote growth. But then you get some events like the ones we're experiencing at the moment, and it really tests the robustness of the algorithms and the models behind them. And this is a first, so I think everyone's going to learn a lot from this experience, and we'll see what happens in coming days if they can recover from this and how they do it.
Wow, so there's a lot to catch up on there. So let's get into your protocol of choice that you want to speak about today. Yeah,
Solana is the one we chose. My experience has been with Solana since early 2020. We purchased a bunch of it in about June, and then layered in over coming months after that. Solana's value proposition is really to be a high transaction blockchain that can handle very, very high performance and low transaction costs. So its real value prop is to be a layer 1 blockchain without requiring a layer 2 blockchain to facilitate these types of transactions. So we've seen the Lightning network on Bitcoin really being pushed hard recently, and the purpose of that, it's a layer 2 that sits on Bitcoin to allow high volume transactions to play out, whether they're like point of sales, merchant time transactions, or other interesting use cases that can play out on Bitcoin. So that is where a transaction will happen on a blockchain that is essentially like a satellite of the main blockchain, and then those transactions will be synced up to the layer 1 main blockchain. So Solana is building a blockchain that doesn't require that, so where all transactions can happen on its layer 1 blockchain. So Solana is still in beta, started in 2020, so it's only a couple of years old. Growth has been astronomical, and we've seen its rise up the market cap charts. I think it's around the 7th most valuable blockchain or cryptocurrency project at the moment. So it's been going well, but some of the scaling issues have haunted it in recent times as traffic has probably been testing the robustness of certain parts of it. And what we've seen just recently, which has been causing a few little niggles, the emergence of the NFT marketplace and the NFT subsector within cryptocurrency has really been going gangbusters on Solana. And due to the nature of the fact that transaction fees are so low, we've seen some very sort of damaging botting activity that's happened more recently. There was a very big NFT launch, a big project launch, and the sheer volume of bots that attacked the launch to try to mint large volumes of NFTs very cheaply actually brought some of the nodes down, which meant that we saw some consensus issues between nodes, and as a result, the network wasn't functioning for a little while there. They're obviously working as a priority to solve these issues without needing to compromise things like the underpinning performance targets and goals that they have. But that has given Solana a bit of a hit on top of the current market in terms of some of the its performance financially. But we've seen this happen with Solana a couple of times now, and the sheer growth of users and the community around it is very strong, and it tends to bounce back very quickly.
So I might dig into that in a second, but maybe just give some definitions for the viewers that are less familiar with blockchains. Is it a fair mental model with the layer 1 and layer 2 that when we were on the gold standard, gold in the bank was the layer 1, and the cash which people were transacting with was effectively a layer 2? It was cost prohibitive to go to the bank and get gold out every time you wanted to transact. So that currency that was essentially backed by gold when we were on a gold standard acted as the layer 2. Is that a fair mental model for people to get their head around when they're thinking about layer 1s and layer 2s?
Yeah, look, if we use Ethereum as a good example when comparing layer 1s and layer 2s. So Ethereum was one of the earlier layer 1 blockchains after Bitcoin. It was a smart contract platform which gave it a range of other use cases, NFTs and decentralized finance and many others. But what happened as the sheer volume of users flocked to Ethereum, we ended up with what's called gas wars. So transaction fees on Ethereum use an auction-based system. So depending on how much demand is on the blockchain at any point in time, fees will go up and down, and those who pay higher fees will get their transactions prioritised in the queue. So what that's meant is through periods of peak traffic, Ethereum fees can actually get really expensive on the layer 1 blockchain. So as an example, you might be looking to buy something off a marketplace for say $50. The transaction could cost you $150 to do, which just doesn't make sense. So there's been a big push lately on some of those types of blockchains to build out the layer 2 satellites, as I was referring to them before, where you can facilitate high volume transactions and cheaply, with a fraction of a cent transaction costs. And then those layer 2 blockchains will then sync back up with the layer 1 to ensure you have the full complete ledger and history of the transaction that's taken place. So
Solana's trying to do that all themselves. They're
correct.
A monolithic blockchain, if you like, as opposed to Ethereum gets described as a modular blockchain with modules built on top of it.
Very much so. Solana's trying to provide all of that at the layer 1 level. And it has been achieving that. However, there have been some teething problems. We do need to keep in mind it did launch and is still in beta mode.
So that's the thing. Its market cap is what, near $20 billion or north of 15 billion, depending on.
A smidgen over 20 before I walked in. Yeah.
So it is strange for such a significant asset to still be effectively in beta, isn't it?
Yeah. Look, they had initially communicated that they would come out of beta sort of mid to late 2021. Some of these teething issues that we've talked about here around scaling, essentially, did start to surface late 2021, and I think at that point they sort of said, let's just put the brakes on and sort these issues out and make sure that we are ready to take on our next wave of users. So then with these these next gen blockchains, if you like, and there's quite a few of them emerging. Solana is probably with Binance Smart Chain they're probably the two main contenders to Ethereum. The real focus for those blockchains is to attract users. Ethereum does its job and it does it pretty well. These next generation of blockchains, for them to continue to grow the way they have been, they need to attract users. So they need to differentiate, and this is the real value prop for Solana. It can do all of those things, but it needs to get better at it to be able to onboard the next billion users.
And so you mentioned the fact that it can go down from time to time, which is a big issue, particularly when you're a layer 1 blockchain. The criticism of Solana when compared to certainly Bitcoin and Ethereum is that it's far more centralised. And I think this is one of the things which can be frustrating in investing. Often people are debating, and their real debate is over time frames. One person will be saying what's going to happen in 6 months, one over 10 years. And in crypto, you see a lot of people debating, putting a Bitcoin debate forward, but talking about a completely different protocol that's trying to do something different. I guess the question is, do you see that happening with these two? It's not trying to be Bitcoin, it's not trying to be a store of value, it is trying to be a protocol that people use for a relatively low cost. And what measures are they perhaps putting in place to become more decentralised over time?
Yeah, so touching on the decentralisation piece, it's a really interesting trade-off. So if you look at Ethereum, for example, it's very decentralised. And in many ways, that's fantastic. But in many other ways, some of the development roadmap has played out very slowly as a result. So through decentralisation, you have a much broader community of opinions. The governance around it gets more complicated, and the number of nodes that need to all be upgraded when software evolves and things like that is greater as well. So what it means is you typically get very strong and robust decisions that need to address a very broad set of stakeholders. And that's great for the longevity of how the network develops. However, the velocity to get there can often be the downside there. It can take a lot longer. So one of the criticisms around Solana, probably more so a year ago, was that it was quite decentralised, which means that they have been able to iterate and evolve quite quickly. But more recently, there's been a huge push to get a lot more decentralisation. And what that essentially means is nodes that are running Solana and operating the network, there are a lot of them and they're spread globally, so that if any one of them goes down, it doesn't cause detrimental issues to the network as a whole. So Solana is pushing very hard, has achieved a lot of decentralisation recently, and is pushing heavily into that space. Now, in terms of performance, something, Chris, I know that you're quite interested in, and where Solana and Binance Smart Chain were chosen to be the blockchain of choice, is a project called Steppen, which is I think it was launched a couple of months ago by fantastically a team out of Australia in Adelaide. And I was having a look earlier today. That app, which is, I think they call it Move to Earn, which is really interesting, but essentially incentivises people to get out and be active, will actually earn tokens which have value behind it. They're at over 500,000 daily active users right now, which is phenomenal in a short time frame, and it is probably the best blockchain first consumer app I've seen on the market.
Is that right?
Yeah, it's phenomenal. It's really
done a huge job, haven't they?
They've done an amazing job. It's they've really thought about the game mechanics. It's a lot of fun. The user experience is wonderful. They've integrated their own marketplace into the product. But when you think about that particular app has as a user, there could be tens or hundreds of microtransactions that happen each day. If you're out walking, you're earning some tokens. You might be upgrading your sneakers, these sorts of things. To do that on Ethereum would simply be not possible.
And same with Bitcoin layer 1, isn't it? It's impossible
Totally right.
buying coffees using Bitcoin layer 1 or Ethereum layer 1. It's
Correct.
just it's never gonna happen.
That's right. So, and that's where the layer 2s are trying to step in and solve those problems. But so you see this consumer app here, which is a really they're aiming for the mass consumer market. They've selected these next generation blockchains just purely because the transaction costs are a fraction of a cent. And the performance of each transaction is able to be consumer grade experience, which means that if you're using an application, you expect something to happen within a second. Otherwise, users start to lose interest. So that's really it's been a great light to shine on, I think, both Australia and the selection of the blockchains.
And the metaverse word means different things to different people. It's not like there's one working definition of what the metaverse is, but certainly gaming and NFTs are going to be a big part of it. That feels like that's the natural use case for Solana. I know you mentioned Stepper there, but more broadly, the fact that it is does have very low fees and is very quick. Are they the two use cases that you see being used by Solana mostly?
Yeah, I think Solana's pushing hard to just onboard billions of users. That's what they're pushing towards, and it's interesting. One of the sort of the charts that we talk about a fair bit is, I think right now we've got around 300 million active users in the cryptocurrency asset class. By the end of this decade, it should be around 3.5 to 4 billion users. So we're going to see huge growth in user numbers. And where are those users going to come from? It's gaming and metaverse plays. And it's mass adoption through consumer usage. So, look, as you said, the metaverse means many things to many people. To me, it's very much the next evolution of your traditional social networks, like a Facebook or a Twitter. They're moving into a virtual world, which is underpinned by blockchain technology and transactions carried out using cryptocurrencies on those platforms. Now, if you're moving through a metaverse and doing tens or hundreds of transactions a day, you need that experience to be silky smooth. So you want to be able to connect your wallet up and almost forget about it being connected. So everything you do just happens seamlessly, and you want them to be cheap. You can't be spending significant sums of money to actually have that transaction go through.
You probably can in DeFi potentially, can't you? Like if you're a huge investor and you're putting through, an institutional investor, and you're putting through millions of bucks through decentralized finance protocols, the $50 fee or the $100 fee is immaterial to you, isn't it? But it's very different at these lower value transactions, which you touched on.
Yeah, quite right. They kind of refer to Ethereum as the rich man's network these days, so, and purely for that purpose. If you're investing, tens of millions of dollars, you can absorb even $1,000 transaction fee. If you're just a bit of a weekend warrior, doing a bit of DeFi yield farming, and you're wanting to put in $1,000 or a couple of $1,000, $100 or $200 transaction fee is exorbitant. It just doesn't make sense. So DeFi is very established on Solana. The same volume is not flowing through it as it is on Ethereum, but transaction fees to initiate, set up a liquidity pair and a liquidity pool, fraction of a cent. Every time you claim your yield, fraction of a cent. Whereas with Ethereum, you second guess every time you're doing that. You're thinking about, what's the gas fee, the transaction fee today? Should I wait a little bit? Does it make sense? Should I wait until I've got more yield to sort of claim these sorts of things? So it's a very different trade-off, but I think to your point, quite right. So Solana is very much going for that mass adoption piece, and we think that's going to come from the consumer adoption, very much so. And then Ethereum will have a different use case, which is high value, transactions, yield farming, these types of things, but with much larger sums of money. Other interesting use cases with Ethereum, I think it's Visa are using it to do daily settlements. And look, not to discredit Ethereum, I think it's a great network. It's proven itself over time in terms of security and stability, decentralization, all these sorts of things. But right now, it's very much I think it is a bit of a rich man's network in many ways. And
I've heard it put forward that the various blockchains are almost like digital nations, and they've got their own culture and social norms, etc. And you do watch it on Twitter, and they do have distinctive personalities. The Bitcoin maxis are different to the Ethereum maxis to people who are in Solana. A, do you agree with that sort of statement? And B, if so, what type of culture exists on the Solana digital nation, if you like?
Yeah, I probably spend a little bit too much time on Twitter and immersing myself in some of these cultures. I'm probably Solana first myself, having been on the journey. There is rivalry, no doubt, and often there's some brilliant internet memes that get created, and it can be quite entertaining. One of the things that is so great about the Solana culture is everyone is very supportive of one another. I think this technology is so new, and there are a lot of bumps along the way. There's a lot of people making a lot of money, a lot of people losing a lot of money, but the technology and the evolution of it is so fast-paced, and everyone's learning together in these communities. So you find people just willing to help each other, and it's unbelievable. You can find people who don't know each other, because often the various community members and users are hidden behind a pseudonym on a Twitter profile, and we'll spend hours supporting each other's projects, to help solve technical issues, or debug things, these sorts of things. And these are people that don't even know each other. They just realise that the power of the network is stronger if everyone pulls in the same direction. And it's quite remarkable when these people really have nothing in common other than a connection on Twitter and maybe invested in the same platform. And this is where DAOs are very interesting as well, decentralised autonomous organisations, where you can own an NFT in a particular project, which is just digital art with some other attributes around it, connect to a Discord server, which is like a big chat room, and all of a sudden everyone who doesn't previously know each other is all pushing together for the same goal, and it's really fascinating to watch it play out, and it's quite new and it's evolving, and I think it's just very, very early still for DAOs and the communities behind them.
It's it's as good a place then to finish. We'll let you get back to the screens and have a look at the carnage. But I really appreciate you coming on the show today. There'll be a lot of people interested to learn more about Solana, but great to get a bit of an overview over crypto markets as well.
Thanks for having me on, Chris. Appreciate it.
Thanks, Dan. This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.